Hey guys, it's Monday again, time for Money Mondays, and it gives me great pleasure to announce that we have a new partner on board. That's right, Money Mondays is now brought to you in partnership with Proven Wealth. So make sure you check out their page at We Are Proven, the Caribbean's premier wealth management company. They have experts to help you manage your wealth, give you great financial and investment advice, and answer any questions you may have. So today we're talking about IPOs. You may have heard that term floating around a lot lately. I even mentioned it last week. What is an IPO? The letters stand for Initial Public Offering. It refers to when a company offers its stock or shares on the stock exchange for the first time. It's a way of raising capital or money for the company. Before an IPO, a company is considered a private company. It has a relatively small number of shareholders, and you, the public, generally aren't able to invest in it unless perhaps you approach the owners and they agree to sell you a stake, but they're not obligated to do that. Once a company lists on the stock exchange, however, that changes. The company is now considered a publicly traded company, which is why when a company launches an IPO, it's often referred to as going public, because you, the public, can now buy shares in that company. And importantly, the company also has to report its financial statements to you, the public. The Jamaica Stock Exchange strictly enforces this, and you can find the quarterly and annual financial statements of all publicly traded companies on the JSE on their website, jamstockex.com. A lot of Jamaican companies are now going public, and there are various benefits to doing this. The number one reason, of course, is for raising capital. When companies sell a portion of their shares to the public, they earn a pretty handsome sum that they can use to invest in the company and grow. Before going public, the company issues a prospectus, which will tell you the price of the shares and what they intend to use the money for. You can read through the prospectus and decide, this sounds pretty good, this sounds promising. This company wants to use the funds to open a new branch in wherever. I think that's a good idea. That's going to make money. It's going to be profitable. This is a good investment. So let me call my friends at Proven Wealth Management to make an offer for some shares. Another reason companies list, particularly on the junior market of the stock exchange, is for tax benefits. They receive very attractive tax incentives for 10 years by listing on the junior market before they have to graduate to the main market. And listing is really a win for good governance of companies. Because like I said earlier, they're forced to make public their audited financial statements. This forces them to ensure their accounts are in order, which is a win for the country as well, because it ensures better managed companies. So what's the benefit of buying shares at an IPO, during an IPO? Well, because it's the first time a company is selling its shares publicly. Especially if it's a very attractive company, there's a good chance there's going to be great demand for the shares. And you get to be among the first public investors in that company. So if its value goes up, you make a profit off your investment. For example, CNBC estimates that if you had invested $1,000 in Microsoft's IPO in 1986, guess how much that would be worth now? Guess. That same investment would now be worth $1.6 million today. And there's several local examples too, right here in Jamaica. NCB shares are now worth $145 each, which is a tremendous appreciation over the years. A more recent example that I gave last week is Fontana Pharmacy. Their share prices at the IPO were $1.89 each, and they're now trading for $4.01 each. So your 10,000 Jamaican dollar investment in Fontana in January would have already grown to over $21,000 in just 3 months. But of course, there are risks. Not all companies will gain value. Some will lose value if they're poorly run or their expectations just didn't materialize, and various other factors. So you have to choose well and really follow the developments in the market to see what industries are likely to grow. Last year, several Jamaican companies had IPOs and listed on the JSE. Many of them were oversubscribed within days or even hours, some even in minutes, because people want the benefit of getting in early. When an IPO is oversubscribed, it means that you might not get all the shares that you applied to buy, in which case you'll get a refund for the balance. The shares are usually allocated on a first-come, first-served basis. So the sooner you get your application in, the more likely you are to get at least some of the shares that you applied for. Now, even though the prospectus may say the application opens on a certain date and closes on a certain date, you still want to submit your application even before it opens so that when it does open, you're already standing in line. This year, several more companies are expected to list. The big one that's highly anticipated is Wigton Wind Farm, which is currently owned by the government, but which they're looking to divest by listing on the JSE. And we don't know what the share price will be just yet because they haven't issued their prospectus yet, but I'll definitely pass on that information as soon as the prospectus is out. In the meantime, though, I'd advise you to contact an investment advisor at Proven Wealth as soon as possible and set up your investment account so that when the next IPO comes up that you're interested in, you're all set and you can get your application in early. That's it for Money Mondays this week. But before I go, here's your credit giveaway. This is Digicel credit. Here it is. Can you read that? All right, the voucher number is 1456990907942. Guys, please share this story. Please share this video on your Insta story. Share it wherever you are. I'm Kalilah Reynolds. We'll chat again next week on Money Mondays.